So Aurik Capital is fairly recent. It's been established in response to an enduring problem that we've had as the Aurik Group around working with banks to raise growth funding for SMEs that we are busy invested in and growing. We have found that banks are better suited to support corporate activities because of all the prudential requirements that they face and Basel restrictions that they face. And this is not uncommon. It's not only a South African thing, we've seen it in the US, we've seen it in the UK, and we've seen it across Europe where we have extensive activity. The Aurik Capital Fund really is centered on SMEs, small medium enterprises that we define as being businesses that have a greater turnover than 15 million rand a year, up to 300 million rands a year. It is the small moving into the mid-tier SME sector within South Africa. There are around 40,000 odd businesses that play in the space across sector, across industry. When we look at a business of this nature, what's interesting is that most of them privately owned, either through families or individuals or partners in business, sit at an average age across those businesses of around 49 years of age. That's within the Aurik portfolio. There are 300 such businesses. 49 is a telling time for most human beings, in that for some reason psychologically you suddenly peer into 50 and a lot of changes take place. In the wealth management market, it's recognized globally to be the time when most people start thinking about increasing their savings intentions with the view to support their retirements. What's interesting in business is that most private business owners, as they start approaching that 49, 51, 53, 54-year age, start to recognize that the opportunity to shift the business model around the business that they have from income only to focus on income and capital growth, so to secure an exit in the next 5, 10, 15 years becomes front of mind. We invest very specifically into that mindset. And hence when I say the portfolio of businesses that we're looking to invest in are governed and led by individuals with that mindset. In the South African context, all your wealth literally resides, or at least the most significant part of your wealth as a business owner, resides in the business itself. And that exit mindset becomes front of mind. As mentioned, we have around 300 SMEs from which to select our investments from. Those SMEs, up and until February last year, were growing revenues at an average 28.9% on a compounded basis. Effectively, that is a business that's doubling in size every 30 months or so. We believe that that same portfolio will be closing its average compound annual growth rate across the portfolio of turnover at around 22 to 24%, given the complications we've had with COVID last year. I still think that's a pretty good growth rate given the environment we're in. From an Aurik Capital point of view, we invest only into growth momentum. So not the promise of growth or the prospect of growth, and certainly not to rehabilitate growth that's been lost because of COVID, but rather the growth momentum must be apparent, it must be there. We have a number of ways of evidencing it before we make an investment. And we are looking to be a fund that supports SME growth in order to maintain growth rates of business owners that already have and are enjoying growth. We are looking to deploy all our investment in the next 6 months. We had a slowdown in our deployment last year given the COVID environment. We created a strategy for all the underlying businesses to reset, rebuild, in order to reignite this year. By far, the majority of this portfolio has found itself on the front foot of the COVID economy. And I believe that we are going to see extensive growth coming through during the course of this year. It's quite natural in many ways for SMEs to turn around and say, well, where will my growth come from in a low growth economy? It's coming from a couple of areas. Firstly, very large businesses which are struggling to grow are increasingly outsourcing previously insourced services in order to lighten their load. And then secondly, if these businesses have been well managed and well structured with a growth play in process, they're finding themselves stepping ahead of competitors who are struggling, and we are foreseeing a lot of activity already taking place where medium-sized businesses are looking to acquire either assets or stock or talent or customers of former competitors. How do we enable our pipeline? As mentioned, Aurik was initially established to provide growth services to privately owned businesses. We have two points of presence in South Africa, even though we work nationally, and that's out of Gauteng and Cape Town. Private business owners, typically from their 40s up to their very late 50s, engage with Aurik to turn around and say, we're looking to now get our businesses to the next level of growth and opportunity. How do we work with you to customize the growth program that will yield the transformation of this business into a saleable asset 5, 10, 15 years from now? Within that domain, we have 430 privately owned businesses currently going through customized growth plans and programs with Aurik. 6 months into that relationship, once we have a very good sense of the business itself, once we have a very good sense of the business owners themselves, their behavior, how they're seeing their business, their ability to set target, achieve target, their ability to action a growth plan, a growth program, they yield data to Aurik. And Aurik has a number of means of collecting data that then can forecast growth with the view to forecasting the risk of that growth. And we have created an algorithm that demonstrates a fundability measure of those underlying businesses. When the underlying measure is met, that business then has an opportunity to apply for accelerated growth support by way of funding from Aurik Capital. It comes into a new domain over there, which is governed really by risk being defined as what are the targets you've set, have you achieved them historically, how likely are you to achieve them going forward, and then the exitability of that investment. We are forecasting an extensive amount of M&A activity picking up more or less at the end of this year to the middle of next year, or at least the next 3 years ahead. And we expect that activity to be acquisitive activity coming from listed entities that are going to be seeking growth performance themselves. The benefits of investing in Aurik Capital: deal onboarding cost is very, very low. We have the benefit of being able to fish for the right deals that meet the mandate of the fund itself out of the Aurik Business Accelerator Network, sitting with its 430 odd SMEs at this point in time. We have a good sense of how the leadership team, the owner team, the management team behaves. We would have a 6-month track record at a minimum, and in some cases up to a 2-year track record as to how that team behaves, how that team leads and governs and achieves the goals that it sets year on year on year. We have a very active post-deal management environment where we meet with underlying investees between 2 to 3 times a month using 30 points of data to look at the forward momentum of the business and identify areas of risk and areas of performance pressure. We rely extensively on data-driven decision-making. 14 points of those 30 points of data are financial, which in their own right look back to the history of the business. The remaining data points all look at the forward momentum of the business and what lies ahead. It's a diversified portfolio. We work across sector, across industry. We are governed more by the team or individuals that we invest in who have an intention to exit over the next 5 to 15 years and who meet the criteria of Aurik Business Accelerator. And we've already started to enjoy a number of acquisition inquiries coming out of the mid-tier cap listed entities on the JSE. To give you a quick sense, this is a classic example. This is one screen of 16 different screens that I could have shown you to give us an indication of forward momentum in the business. When we engage with the business, typically they're averaging at a baseline, and some months into the program you see pickup of activity all the way through to give you a very good sense of the direction of the business itself. What's interesting about how we invest is when a business seeks funding to support its growth momentum, We have the ability, based on the data we collect from the business, as well as the behavioral capabilities or resources of the team, to identify what the forward trend looks like. In an Aurik instance, we promote actively building scale prior to next level growth, then doubling down on scale for the next stage of growth, and we run the cycle consistently, annually, right across the portfolio of businesses we work with. This puts us in a position where, should a business be looking, for example, for 3 million rands or 5 million rands of growth momentum support, we're able to invest it in tranches at very, very low cost, and in so doing, minimize the exposure to default or risk. A few examples: a business, 60 million rand turnover, one of the smaller businesses, but a very exciting business, led by an individual who's arguably one of the top 10 thinkers and knowledge seekers on spectrometry, which is the science of light. Over the years, he has brought in spectrometry equipment from Switzerland, from the US, from Germany, from China, that's been used extensively across industrial South Africa. So classically, on food sorting lines, it picks out the rotten nuts or the wrong shaped nut, or the egg that has is a jumbo instead of a large, etc., etc., etc. Of late, in the last 5 years, drones have become ubiquitous right across industry. They have collapsed the cost of services quite substantially in mining, in agriculture, and in oil and gas. The demand from those industries in the use of drones is to create spectrometry that can sit on a drone in order to evaluate, for example, the health of a crop, or the content of the soil, or the need for irrigation, in order to then govern and minimize and maximize the performance of all the fertilizers, the irrigation process, the harvesting process in the agricultural field. Spectrometers are used actively to look at, for example, structural integrity in oil and gas plants on all concrete or steel structures. This particular business is seeking to raise funding from us with the view to upgrade manufacturing capabilities to make smaller the spectrometers in order to fit and house themselves on drones. Another example, this business has provided fantastic software coming out of the US for years. Typically, it would provide it to a business that has a number of, or has big assets in plant and equipment. So if you look at this grader, for example, the cost of this grader is sitting upwards of around 7-8 million rands. When the grader's not working, the grader's losing the company money. The software in itself is able to create an X-ray scope of the grader, identify where all the points of stress on the grader are, and forecast a preventative maintenance program. What's happened over the last 3 years in South Africa, where big businesses have struggled to grow in a low-growth economy, they've increasingly outsourced services, and the demands faced by this business now are, rather than supply us with the software and we then employ the individuals and acquire the hardware to run the service ourselves, we would prefer you to supply us with the service on a term contract basis. It's the migration of a product cell into a service cell, and that service cell has annuity revenues over a period of time. The last example I'll share with you, and these are just 3 that I've randomly selected, is a fantastically boring business that manufactures steel and plastic drums. They're reconditioned drums as well. The drums are used extensively across industrial South Africa. And this particular business, which is a family business with next generation already in play, is looking to raise funding to acquire a former competitor that is struggling. In acquiring that former competitor, it will introduce a drum making plant that brings it into the paint sector in order to create 1 liter, 3 liter, 5 liter, and 20 liter drums, both plastic and steel. But more excitingly, it's introducing a technology into this business that will allow it to create on-site drum manufacture for the outlying farms, the outlying mines, and the outlying oil and gas industry. And that in itself will reduce the cost of drum to those particular sectors by an expected 18%. With that, we're raising funding in investments of around 200,000 Rand or more. And all information is available at Jaltech through a prospectus that's been written up in order to support the process of fundraising. Thank you, Mike.